Well, for more on China's economy, I'm now joined by Yifan, she's chief economist at Citic Securities, whose previous work experiences included consulting at the World Bank. Thank you so much for coming in to speak to us. So let me just start by asking you about the latest economic data that we've had out of China. We're hearing there that we saw gains in retail sales, consumer prices. What does this tell us about the health of China's economy?
In our view, overall, I think the China's fundamentals are pretty healthy, but also at the same time, we see the tightening policy, the impact already gradually kicked in because we see the investment data, and also for the M2 data, also the growth gradually slowed down.
We've seen a continuing increase in consumer prices. We were saying also a strong surge in Chinese exports last month, which rose by almost 50%. Is this fueling concerns about an overheating economy?
We don't really think that's the trend, because especially for the exports, and we think actually it's a short-term fluctuation, because given last year, the May, we have the long holiday for the whole week, so we have very low base effect. And also with the expectation of the RMB appreciation, so for the exporters might want to export more, like before maybe the RMB really appreciated. So I think that given the debt crisis of the European will gradually kick in, and also with the austerity packages and in all those European countries and even including the US, so we think the export will continue to grow, but will in a very mild way.
Yeah, so export growth will be affected at some point by the European debt crisis. We've not seen evidence of it just yet, but of course it's bound to have an effect given that Europe is China's biggest overseas export market. To what extent does this strengthen the argument for China to allow its currency to appreciate against the dollar?
We think because the China's currency, we expect actually might appreciate in the second half of this year, very likely maybe in the late third quarter or fourth quarter. So might appreciate by 3% this year, very likely.
By 3%. And what about, I mean, this is a great bone of contention, of course, between China and the US. Will a 3% movement on China's currency be enough to satisfy politicians in Washington?
Yeah, I think that's a very good question. We think this year China might announce its new currency strategy, because before China is like a peg the US dollar, might to peg to a basket of currency, and also with a daily ban. And also this year, maybe it's very likely China's announce another strategy. It's called a cross strategy. So it's like given China's RMB some expectation to appreciate maybe by 3 to 5% in the next 3 to 5 years. So the strategy is, we call it BBC, so it's very similar to the Singapore currency strategy. So if you think about the currency to appreciate 3 to 5% in the next 3 years, so it will be about 15 to 20%. So that could satisfy the Washington side.
And is it in China's own interest to do this?
I think in the market, it is widely think that China's RMB is to some extent underestimated. So, but no one knows what's the extent. So I think this strategy could allow China, the government, to test what's the magnitude of the RMB to appreciate, and at the same time also give some confidence to the market to avoid the severe market fluctuation.
I mean, we were speaking about inflation. We've seen companies like Honda and Honda agree to raise wages. What could that potentially mean for risks of inflation going into the second half of the year?
For the inflation, we think definitely this time it's the highest in the last 19 months, so it's much higher than expectation. So, but it's also in line with our forecast, because as you know, the last year the base effect is very low. So in the future, we expect the YOY growth will continue to rise mildly, but for the month-on-month growth actually will continue to fall. So the whole year we think it's still around 3%. So giving your question for the wage rise, I think it will affect maybe the lower and labor-intensive products, but will not attend the high-end products.
Well, Yifan from Citic Securities, thank you so much for your time. We do appreciate it.